What is going on with STX? The STX token has been the worst performer among the top 100 cryptocurrencies in the last week. Does it make sense to buy this bottom now? Because in the end, crypto is all about buying low and selling high, and obviously we are currently low in STX. Let's have a look at relative valuation charts. Let's see where historically STX turned around. Let's try to figure out where it's a good time to buy. So here's an overview of the top 100 cryptocurrencies ordered by their performance in the last week. And we are ordering from bottom to top. The unfortunate number one is STX with a loss of 33% in 7 days. Yes, this hasn't been the best week for crypto in general, but STX definitely did much worse. Now, this is not the first video on STX on this channel. I published one 426 days ago, and that video discussed the fundamentals of STX as it's a layer 2 on top of Bitcoin, similar to how Optimism, Arbitrum, Polygon, etc. are layer 2s on top of Ethereum. Now, that video outperformed the average video on this channel. In other words, the average video is here in gray and the STX video is here in blue. So there's definitely interest in the token, but that interest didn't necessarily 100% translate into performance. Now, it's not like the price completely collapsed long term, right? 1.5 years ago, we were still at 73 cents. Now we are at $1.65. So there was a 2x, but have a look at this volatility. We pump and dump, we pump and dump. Currently, we are rather dumping again. Now, this is the long-term price chart. Here's the long-term market cap chart. It seems like there is a bit more growth in the market cap compared to the price chart, and that's because the overall supply of STX increases over time. Now, the usage of the STX platform is unfortunately not really growing that much. We've got the miner spending at the top, the block spending at the bottom. There's no long-term growth chart here, unfortunately. Here's the total value locked chart according to DeFi Llama. This is in US dollars, and here's the same chart in STX. There might be slight growth, but again, a lot of volatility as well. Now, the market as a whole is definitely not historically cheap. We are somewhat heated. The best time to buy is always when Bitcoin is below the realized price. Now, the realized price is the average cost basis. What did people on average pay to acquire Bitcoin? And when the market in aggregate is in losses, it's the best time to accumulate. Unfortunately, those kind of situations only happen every 3 to 4 years. The last time was when Bitcoin was at around 20k after the STX implosion. Now the average cost basis is at 40k, and the market as a whole is almost 2.5x in profit. That's how much potential risk there is. The realized price is going up, but still, if your wealth would get crushed in case Bitcoin goes down by 20 or 30%, then you're probably overexposed. There is quite a bit of risk. Now, the risk for the altcoins is probably not as high, because this here is the others dominance. This shows how much of all of crypto is in the altcoins that are not in the top 10 in terms of market cap. STX is at number 51. Its market cap is 2.5 billion. And we seem to be moving somewhat in a predictable trading range. And currently we are rather at the lower end. So there's a risk of altcoins potentially underperforming of maybe 13%, but a potential reward of maybe 113%. Now, nobody knows if those imaginary lines will prevail, but it's still good to get somewhat of a rough guesstimate where we currently are, relatively speaking. Bitcoin historically is high, but the altcoins relative to Bitcoin and Ethereum are not necessarily that high. We have not yet seen altcoin season. Now, when buying any altcoin, I always like to look at relative valuation charts, because if we simply just buy Bitcoin, we get the average market return. But when we buy an altcoin, we want to get more return because we take on more risk. So we have to look at opportunity costs. So instead of looking at US dollar prices, I believe it's better to look at relative valuations to Bitcoin. And so let's do exactly that for STX. What we've got here is STX divided by Bitcoin, and this moves quite nicely in a trading range. That trading range is quite large in its magnitude. So over here we've got a 77% drop. Over here we've got a rally of 143%. And since March of this year, STX underperforms Bitcoin so far by 69%. And so nobody knows where we will exactly turn around, right? Are we already close to a potential turnaround point? And are we going to see a rally similar to November of 2023? Or do we still have risk of going down by maybe another 30%, potentially even 40% relative to Bitcoin, for the potential upside of 155%, maybe 225%? Again, crypto is a game of buying low and selling high. Now, one potential approach could be to buy in several steps, right? To make a first purchase now, and in case it goes lower, to buy again, and in case it goes even lower, to buy again, and to then have a final stop loss in case we fall below the historical lows. So that would work something like the following: buying a bit right now, buying a bit more over here, maybe again doing a final purchase here, and if we then still fall below that final support, maybe by another 10 or 20%, then it's maybe time to face reality and to cut losses. But during all of those purchases, the potential risk to potential reward should be quite positive. Now, this is a chart relative to Bitcoin. Unfortunately, the chart relative to Ethereum doesn't look that pretty. So here is that relative valuation chart. In here, we are not necessarily that dirt cheap. We are not that elevated either, but we are somewhat in the middle of that trading range. This chart would imply that it might make sense to wait another 22% underperformance relative to ETH. Maybe, if you're very pessimistic, even 45%. Now, the macro picture very much looks like we are at a pivotal moment. It seems like we are very close to an altcoin rotation because the risk to reward for Bitcoin at this moment is not that great. Have a look at this long-term Bitcoin chart and check out those two red lines. At those points of time, the upside potential for Bitcoin wasn't that great anymore relative to the downside. So this is a very long-term chart, right? We did not yet hit the top, but we are relatively close to the top. Now, those lines are not scientific whatsoever, right? They're simply just curved lines drawn on the Bitcoin chart, but they tend to connect the tops relatively well and they tend to connect the bottoms relatively well. Currently, we are very close to such a high risk, poor reward situation for Bitcoin one more time. Now again, have a look at those two red lines. Those points in time correspond with those red lines over here. This is the Bitcoin dominance. The Bitcoin dominance crashed when the risk to reward for Bitcoin wasn't that great anymore. What does a Bitcoin dominance crash mean? It means that Bitcoin as a fraction of all of crypto is going down. In other words, it's altcoin season. The altcoins outperform Bitcoin at that point in time. Now, historically, that rotation happened when Bitcoin dominance was at around 70%. This time it seems to happen a bit earlier, but it looks like we have already started the rotation again because the risk to reward is not that great at the moment for Bitcoin. People want to get the multiple X returns and they're not anymore that easy to be made with Bitcoin. And so what asset class performed the best in the last 7 days? It is the risk on categories. It's things like frog theme tokens or AI memes. And so the largest of the AI meme tokens are things like Fartcoin, which is currently at 44 cents, which had been covered on this channel when it was still at 5 cents. Or it's things like Goceus Maximus, which is currently at 56 cents and it was at above $1.30 at one point, which was covered on this channel when we were still at 25 cents. Or here, another AI meme, AI16Z, currently at 67 cents. And we talked about this here at 28 cents. Now, how did I discover tokens like this that early when they still make multiple X returns? The answer lies in on-chain analytics and in wallet tracking. I like to track wallets of other insiders, of influencers, of top traders. And so have a look at the recent trade. I published this in the Gerhard Trade channel on December 10th, how I'm buying some Alchemist AI. And since then, the price appreciated by more than 40%. And it is the best performing token on Solana in the last 24 hours. This is not random. This is not luck. This is all happening because of wallet tracking, because we get transactions whenever influencers and top traders are buying. Here, have a look at this recent trade by Crypto Gains. He bought Morph AI, and this is the chart. This is a channel of Crypto Gains. He's got 140,000 subscribers, and he talks about small cap cryptocurrencies regularly. And we are tracking 55 of his wallets. Or have a look at Crypto Banter. They've got 1.1 million subscribers. When they talk about a token, especially a small cap cryptocurrency, of course, this generates a lot of attention. Attention turns into purchases. Purchases turn into rising prices. And so we are tracking 33 of CryptoBenter's wallets. Or check out Alex Becker, 1.5 million subscribers. Through on-chain analytics, we found 12 of his wallets. Those are not official wallets, right? Those are wallets that we find through various means. Now, what kind of means? It's explained over here in this tutorial course. It's 8 videos in total. It's explaining how to find influencer wallets, how to track influencer wallets, and how to then interpret the signals that we get from the tracking. It's all part of the premium membership of this channel. Premium is not just about wallet tracking, it's also about on-chain analytics, it's also about backtesting, it's also about risk mitigation and portfolio diversification. There's more than 100 tutorial videos in total in premium. And so if you want to stop just chasing the trends, if you want to be early, then feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. Now, here's the thing. For STX, I believe that the price discovery does not necessarily just happen from retail interest. I don't think there's so many people that buy into STX regularly and that STX has such a huge following. I believe the price discovery actually happens on the centralized exchanges. The centralized exchanges own a lot of STX for market making, and they are interested in generating a lot of volatility to both directions. Volatility means trading fees means revenue. Volatility also means liquidation fees, again translating into profit. And right now the centralized exchanges aren't moving STX too much. So Binance is leading the trading volume for STX, but there's also perpetual futures. 86 million worth of STX moved in the derivatives futures market on Binance in the last 24 hours. That's not necessarily that much given the market cap of more than 2 billion. Now, is this the perfect time to buy STX? Potentially, right? We might fall a bit lower, but it seems like currently the market, at least for STX, is not heated. The best time to sell STX is whenever its relative valuation to Bitcoin is high again, and when the perpetual futures market is very high in its trading volume. That's when there's a lot of leverage in the market. And so again, it's hard to pinpoint the exact perfect bottom, but it's relatively straightforward to find good exit opportunities. We simply check when STX relative to Bitcoin is quite high and when the perp trading volume is in the billions, not just in the tens of millions. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.